Alright, welcome back. This is the final planned Camtasia video in preparation for Project 4 in Energy Accounting. It's fall 2011. We're at Texas Tech. It's early in the morning. This is what I call quiet time at my house. There's not much of that. Anyways, Camtasia videos will tend to come early in the morning, at least from the production side. Technical note, I learned yesterday that these videos need to be under 15 minutes in order to post them on YouTube. So we're going to get cracking and move along kind of quickly today. We're talking about agency cost, and we will be looking at executive compensation data today. That's what we'll talk about. Yesterday we looked at performance for the companies that our executives will come from. Of course, there are exploration and production companies, big ones. The data we look at is from the past decade, 6 years to 10 years, depending on the source. The primary source of our data today is the SEC filing known as the proxy statement. Proxy statement is also known as Form 14A, and a trivia question for the auditors especially. The proxy statement is where audit fees show up. All right, so executive compensation shows up there, so do audit fees. Throughout this section of the course, we've talked about agency cost being a manager level thought, right, in the mind of one of our recruiters. And so we keep looking at different definitions of what is an agency cost. Here's today's story. It's incomplete, but simple. All right, so whenever someone is working for you and they don't work as hard as they can or as hard as they should, or when that person who works for you takes stuff they don't deserve, and usually all this happens because the agent, the person who works for you, they can get away with it. All right, and in those situations you have agency cost, and some amount of it is inevitable. Right? If you own a bar, you can count on the fact that your bartender is going to give away drinks. Right? So if you were tending bar, you'd probably give away drinks too. It's just whoever your agent is, they won't do it the same way you would do it, and it's not costing them any money to do it, so they'll probably give away more drinks. Whenever the agency costs get real big, an informed principal should do something about it, and thought I'd introduce a segment called the Pittsburgh Note. So this is something that will be, whenever you see that, think this is going to be politically incorrect. So here's the story. This is what I just described is distinct from hiring kind of dumb people, right? If they work really hard and they're kind of dumb and you hire them and you know they're kind of dumb, you need to make an adjustment as an owner, right? It's not an agency cost that you have a less than qualified person as your agent. If you know that, it's just a poor owner decision. All right, let's turn to enough of agency costs. Let's turn to the data. Where to start? This has been a discussion point. As I talked about yesterday, whether you were in class or Camtasia, start with the performance file, right? Look at how all of these companies are doing. Watch the video. I think what we're going to look at today will make more sense if you've seen the video first. In my opinion, it's also important to try doing something with the performance Excel file before looking at this file, but you can make the call on that. One important item that came up in class yesterday unanimously from everyone who attended class, they like the option of being able to turn in Project 4 at the end of class next Tuesday, which is November 1st. Right now, this really is an option because you can still turn in the paper by tomorrow at the end of class if you'd like. If you do that, and I don't know how many people will, and your paper passes some minimum standard of quality, meaning it's like I can read it, if you get that to me before the end of class tomorrow, I will give you some suggestions. They'll be brief, and I'll do that by email. But then for everyone, Project 4 is due by the end of class next Tuesday. Same instructions like the whole email thing. And so if you're watching this Camtasia video, you might wonder, do I need to come to class tomorrow? What will it be like? And if you have that question, the answer is class will be much like it was yesterday, meaning we'll talk. There's no intent to disclose anything that gives people a competitive advantage. I think people asked some good questions yesterday. There wasn't much to ask a question about without really digging into the data. So we'll do the same thing again tomorrow. All right, but let's talk about pay for performance. I mentioned you get some information through iWorks beta. I'm not sure if that's working. If it doesn't work, just check with Blackboard. Like yesterday, let's do a demonstration with a little music. All right, let's get to the data here. Enough music. Here's our data set, and this should be in Blackboard and also in that iWork beta file. What you have is a complete list of executives who appear in proxy statements that Standard & Poor's pulls data out for them for all of the companies in that performance data file, right? So every company we've looked at or talked about plus Shell, right? And currently this file is sorted by salary plus bonus, right? Which shows up here as column G, right? Salary plus bonus is the sort file. You'll notice the first person had no salary, no bonus, and made $1, right? So all of the figures here are in dollars. I'm sorry, in thousands of dollars. Need a little coffee break. This file is organized in a manner similar to the file from the other day. You're trying to just do something sensible. Salary is a calculation. Anytime you see calc, where I'm pointing at right now, that means I've put together two numbers. In this case, I've added salary and bonus. All right, so the calculations are not anything magical that I'm doing. Numbers that don't have calc below them come straight from Standard & Poor's. So this file is organized where you're taking different looks at cash-based compensation, and then things get confusing out on the right side where I'm waving this wand thing, the pointer, because now we introduce options, right? So options are how a lot of executives are compensated. All of the stuff that shows up here in pink, I'd say, is beyond the scope of what you want to get into, right? It's more detail than what you need about how stock options compensate executives. What I would focus on, if that interests you, is this column, total V1. It's a Standard & Poor's number that they have created. When you see no number like this person, assume it was 0, right? But this is Standard & Poor's attempt to represent total compensation, including options that someone was granted. Now, you should assume that that would include maybe the Black-Scholes method for calculating options, and in some cases you can see a complete match. Right? Here's someone from Forest Oil with $100,000 in options, and the two Standard & Poor's definitions match up. Sometimes they don't match up perfectly, and that's what this difference column shows you. It might be beyond our scope to figure out why that happened, but it also is interesting to just see. Right, here's someone from Anadarko with a really big difference between what Black-Scholes says their options were worth and this other method Standard & Poor's uses in an attempt to figure out what executives were paid during a given year. All right, scary thing for all these people is they're listed by name. And that's the file you're working with. Do lots of sorting, as I've talked about. One thing you might do is start with just getting rid of a whole bunch of people. Like this Robert Reeves, interesting. Why did he work at Anadarko for $1? But he's certainly not the typical executive. When you go down to the bottom of this file, you'll get to some very highly paid people. If you look in here, these people are up in the millions, so you might want to sort by maybe this V1, right, or V2, like some attempt to consider the total compensation paid. That might be a better way to sort and then get rid of data that you don't want to look at. Right? Again, you can look at, let's go on here, use the data. All right, let's review what we're trying to do. At the end of the day, you want to title this thing. Don't worry about that until you've started looking at the data, right? So you've got performance data and you've got compensation data. Ideally, you want to form an expectation of what companies were performing well and then use the compensation data to determine things like this. Were the high-performing companies rewarding their executives in a relatively nice way, and were the poor performing companies not paying too much to their executives? So try to keep simple thoughts in your mind as you look at this data. The project, we've had this slide up for a while. One change though is the very bottom line, highlighted and underlined. That November 1st date is the day you need to get the project to me, which means that I can only have grades for the first 3 projects, and they will be posted by our number tomorrow. And we're getting near the end here for today. What to write about. Make sure your agency cost is in there. At a minimum, you need your selected company plus Occidental and Pioneer. If you take that approach where you're only going to look at 3 companies, do some depth. Like try to find Occidental, Pioneer, and your company's executive compensation story, kind of like what we looked at with Exxon. Alternatively, you could take a broader analysis perspective. Like look at all this data, right? All companies. You wouldn't need as much depth if that's the route you're going. Either route is fine. Certainly looking at all the companies not required. And keep the general question in mind: is pay for performance at your company better or worse than comparison companies? At this point, you should be ready to get going. Analyze data. Keep in mind the big societal question at hand. We make this assumption that executives' pay should somehow be related to corporate performance. We're going to look at some data and figure out whether it is related to corporate performance, which is sort of interesting. And here's some example titles, right? So you might be thinking, why does he keep saying title? Be professional about it. Like let's say you were doing Occidental, which no one is, and most of the evidence so far points to the fact they pay their people gobs of money. You don't want your title to say things like Occidental screws over the shareholders, right? So say, if that's what you believe, say it, but say it in a more professional way. All right, things I owe you, full costs for successful efforts, Camtasia video. Really, that belongs in the last section of the course, so I'm not feeling too time pressured there. All right, I think we're 1 minute under. Let's see how this works out.